Well, good morning, traders and investors. Today is November the 19th. Man, where is this month going? A better question is, where is this year going? It's like a black hole. I remember it starting, everything was fine, and then it's like a blank. And next thing I remember, summer's over, my birthday's here, and now it's almost the end of the year. Heck, Thanksgiving is almost here. Next week. Honestly, I got to say, don't you guys think this year went by faster than any other year in history? Maybe because there's been so much data and information. But again, we've got to stick with what we got to work with. That's the key here, and not try to extrapolate and make something. I see the biggest problem this year is traders are using their bias instead of focusing on objective data. Folks, if you want to be a successful trader, you've got to be super, super objective. Don't get caught up in politics or don't go down rabbit holes. Bottom line is stay objective. That's the only way you can make money consistently in the market. And as far as I'm concerned, markets and making money is more important than politics, at least for me. So let's move on with that. Global stocks, they fell Thursday amid anxiety again. Oh, we're here again. Over the economic fallout rising from COVID-19 infections in the United States and Europe. Now, folks, I'm going to ask you a question. When I read that just now, doesn't it feel like I'm reading a report from March of this year? Look at global stocks fell Thursday amid anxiety over the economic fallout from rising COVID-19 infections in the United States and Europe. I mean, it's like March all over again. Markets edged back from record highs in recent days as investors became more cautious about business impact of continued rise of infections. Big news yesterday. I was driving home from work. I look at my phone. Boom. New York City closing public school for in-person learning. Their threshold level, I think, went beyond 3%. When 3% of whatever population gets it, New York closes their schools. Here we go again. Investor optimism about vaccine development has been tempered by rising case numbers in the United States and other countries. American state governors and mayors are grudgingly issuing mask mandates, limiting the size of business gatherings, banning indoor restaurant dining, closing gyms, and restricting the hours and capacity of other businesses, which sounds exactly like what we were dealing with in late February, early March. Newly confirmed U.S. virus cases are running close to 160,000 per day. Deaths are averaging about 1,155 per day, highest in months. So remember, a lot of people thought once the election was going to be over, this whole COVID is going to blow over. And I told you guys, it's not. It's not. Well, look where we're at right now. And here, this is what I've been talking about. We're finally getting to that point. Newly confirmed U.S. virus cases are running. Oh, we read that. On Wednesday, here, this is important. Pfizer and BioNTech reported data suggesting their potential vaccine is 95% effective. But this is the part that we never heard before now. We weren't getting this in February, March, April, May, June, July, August, September. And finally, in October, people started asking the right questions. And remember what I always say, markets do not assimilate. Markets do not assimilate or price in till we see people starting to ask the right questions. Even with these encouraging figures, there's no guarantee a vaccine will be approved, or if it is, how long it'll take to be widely distributed. See, 6-7 months ago, the question was, when is the vaccine coming out? When is the vaccine coming out? When the vaccine comes out, we're all going to be back to normal. And I said, slow down. We got to get through certain things. Who's going to get it first? When is it coming out? Is it effective? What are the side effects? How expensive is it going to be? What about the dosing? What about certain people who don't want to take it? Is it safe for kids? Is it safe for adults? You see all these questions? Just in the next 6 to 8 weeks, these questions are going to reflect themselves within the market. The market's been very binary. No COVID vaccine? Yes, COVID vaccine. It's not zeros and ones, folks. It's a gray area. For example, did you know it's going to take about 6 to 9 months to get the vaccine, which means you're going to miss the complete winter cycle? Did you know that it's not going to be 100% effective? Did you know that there may be other strands? There's a lot of issues. And we haven't resolved any of these yet. We haven't asked the right questions. And markets typically do not assimilate things ahead of time. Believe it or not, markets are not as efficient as people believe they are. Markets assimilate data one step at a time. And we're finally assimilating the fact that there will be a vaccine, and we're not going to die, and the world is going to be fine. But the hard questions are going to start coming up, and that's when markets will begin assimilating this into their price action. Crude oil, again, $41.50, slightly below the dollar value that U.S. frackers actually pay for crude oil. So right now, U.S. frackers are losing money because they cannot even make profit on the barrel of oil that they process. So that's where we're at right now. The price has to go to about $43, $42.50, $43, $44 per barrel. We're a little bit below right now, but this is not good for the energy sector. Now, data and more data. Housing starts and permits, they were smoking hot. I mean, they were hot. I want to show you this number. Look at this. Right at the upper edge of the spectrum. Expectations for October starts are a sharp rise. Now, today we've got jobless claims, we've got Philadelphia manufacturing, and we've got existing home sales. I'm going to make a bet that existing home sales is going to be off the charts. It's going to be a very, very strong report. Manufacturing looks pretty good. Let me show you what last week's numbers were. General conditions index for this Outlook survey's diffusion index of manufacturing new orders and shipments have been soaring, posting nearly a 50-year high in October. For November, the number's not going to be as high or expected as high, but it's still expected to be on the high side. Prior was 32.3. Consensus is 24.5. I'm going to make a bet we're going to beat it. The biggest issue is the jobless claims number that's going to come out in about 7 minutes. Again, it's not that the number hasn't been going down. It has been going down. It's not going down fast enough. At the peak, like February, March, April, it was near 1 million, 1.1 million, and it's now still at 700,000, which means we're still unemployment is very, very high, and the number's taking a long time to drop. While it's moving below the 4-week moving average, it's not moving fast enough. So I believe jobless claims, even if they're going to be positive, unless the number is like below 650,000, it's just not fast enough, which is telling us economy is springing back slower than expected, especially in certain sectors. Now, if you look at the Dow, this is the Dow industry. This is 30 stocks in the Dow, and if you look at all 30 stocks above the 50-day moving average, it looks like it's peaking out near the 80th percentile. So out of the 30 stocks, about 24 of them are, once we get 24 stocks above the 50-day moving average, 80% of them, it tends to back out. We went a few times 100 stocks, but usually it's about 80-90%. But momentum levels are getting a little above themselves. If you look at the S&P 500, which has 500 stocks, you will see that about 400 out of 500 are above the 80th percentile and 50-day moving average. So the Dow is backing off 80th percentile. The S&P is backing off the 50th percentile. And I'm not even going to show you the NASDAQ 100 because that's the one that's set to decline the most, because that one had the highest momentum over the last 6 months, and the NASDAQ 100 is the most overbought. Now, if you look at the S&P 500, we couldn't take out the high that was made on the 9th of November, all right? If you look at the Russell 2000, it made all-time highs yesterday. The Russell, the small caps, continue to outperform the broad index. And if you look at the Dow, let's see if the Dow took out that high. The Dow did take out that high. The reason the S&P is faltering right now and can't take out that high is because it has a lot of NASDAQ 100 stocks, and the NASDAQ 100 stocks, as I just said to you, have been overbought. The NASDAQ 100 still to this date cannot take out the September 2nd high. So till I see the FANG stocks take out the September 2nd high, no soup. And on the SPY, till I see on SPY stocks it take out the November 9th high. See, the one index, the NASDAQ, which I showed you a minute ago, can't take out the September 2nd high. The S&P can't take out the November 9th high. The Russell took out both of their highs. So the Russell continues to be the leading sector, followed by the Dow, followed by the S&P, followed by the NASDAQ 100. So the reason is basic material, consumer stocks, non-tech, non-healthcare is doing really well. That's what's propping the Dow forward. The Russell's undervalued because it's been undervalued because of the trade war, which is not going to continue with Biden taking office. So again, there's a reason why this is happening. So again, you've got the Russell leading, then you've got the mid-cap 400, then you have the Dow Jones, then you have the S&P, and then finally, you have the NASDAQ 100. That's the positioning that we are in right now. So you need to know that. Now, before I let you go, I want to show you a stock that I'm not liking, and I'm going to fade this stock. This is Wells Fargo. I've been shorting the stock all year. I've been talking about shorting the stock for a long time. I mean, a long time now. The trend is down. Every time we peak higher, we make lower highs. We've already gone below the crash level following the COVID-19 crash once and then twice. And I think we're going to do it again. We're making a 90-day low and a 10-day high, and we're breaking down. So what I would do is I would sell right at the 24.90 level, and I would cover myself at the 26.15, 26. This bar, that's our risk right here. We want to sell right here, and we want to cover ourselves right here because in theory, this should be the swing high, and this should continue going lower and making new lows. Profit target would be right around the 1950 level. So you're going to short it right around the 24.70 level and take profit right around the 19 level. And if it goes about the 26.20 level, I would just get out of it. And again, we're going in the direction of the long-term trend, and we're going against the direction of the short-term trend because we want to see the short-term trend revert back in the direction of the long-term trend. We always want to take trades in the direction of the long-term trend, and when the short-term trend is finally exhausted and begins moving in the direction of the long-term trend again. So we believe that the short-term trend has peaked out, has gone against the long-term trend far enough. This is the long-term trend, the 200-day moving average. And now it's reverting back, and that's the peak right here. That's the principle of the 90-10. 90-day swing low, 10-day high, and then we sell it again. Now, don't go anywhere. I've got something really big for you. Most of you don't know this, but massive hedge funds, institutions, and banks are gearing up to take over the stock market's algorithm trading. Folks, we're 80% there, and they plan on leaving you in the dust. But there's still hope left for the everyday investor. Folks, I've got you covered. I've got your back. You see, I've developed an algorithm. It's a trading machine that investors like you can use without investing millions of dollars in upfront capital, knowing how to be a computer science major, or having a post-PhD degree in statistics. Oh yeah, it's like that. No PhD in statistics, no trading, programming, algorithm experience required. All you've got to do, you've got to know how to place a trade. It's that simple. I spoon feed it to you. Now, this system has been developed to take advantage of algorithms running the market. Now, if you want to get your hands on this, and I highly suggest you do, click on the link below, and I'll show you how not only to get ahead of Wall Street, but to supersize your account and lead the way. Stop losing, start making money consistently, just like we do. Follow the link below, learn how algorithms can be your best friend without you having to become a science major and having to go back to school. You don't have to go back to school. You don't have to learn algorithm trading. We do all the hard part for you and spoon feed you all the goodies. Follow the link below, learn all about it now, and have a great day. Bye, guys.